Hey everybody. It's like people are pretty optimistic here today. That's good. Good to see. Good to hear. Good morning. Good morning. Morning. We've got sector rotation going on, and I know many of you love to kind of see my take on where the money's flowing. Because as far as I know, nobody else really talks about where the money's flowing. What was hot, typically. Hopefully I'll have, as we come into it, I'll get some graphs on the hottest sectors of the year and what we expect to be hot next year. For those that have been with me for a while, I commonly talk about the fact that whatever the hot thing was this year, unlikely to keep being the hot thing next year. It's just the way the market works. The hottest sectors typically don't stay at the top. And I'm not necessarily talking about the AI trade or anything like that, but the hottest sectors don't tend to stay at the top. The worst performing sectors don't tend to stay at the bottom. So we tend to see a jockeying. It doesn't stay the same year to year. So as we get into the last, we only have 13 closes left this year. Isn't that crazy? 13. We have 5 this week, 4 next week, 3 the following week, and we're done basically. I guess, no, it's 12. I guess it's 12. 13, 12. Yeah. Crazy. It's just crazy. So we've got a full week this week. Next week we have Christmas. And then right down to the end with 3. So we have 5, 4, 3. 12. Crazy. Absolutely crazy. Just where'd the time go? So if you're trying to do any tax selling, do any tax adjustment, take some losses against gains, whatever it might be, you got 12 days left to do that. Welcome back to the show. Grab your coffee, maybe something a little stronger, because we need to talk about the absolute bloodbath, the carnage, the soul-crushing shock that's apparently been rocking Wall Street to its very core this last week. Of course, I'm talking about that S&P pullback 1 whole percentage point. What a bloodbath, right? I know. Take a moment, breathe it in. It's a lot to process, all in this FOMC volatility. Now, if you only looked at the big, shiny numbers from those indexes, you think, okay, a little dip, no big deal. But underneath the surface, it's a whole different story. I mean, it's kind of like looking at a calm lake. Everything looks fine on the surface, right? But just below there, it's a chaotic wrestling match between the big fish and the little fish and all the other creatures that live in the lake. And Goldman Sachs, in their infinite wisdom, called it a forceful rotation. It's a shock for a lot of portfolios. And what, may you ask, caused this great upheaval and rotation? What could possibly shake the foundations of our glorious, ever uptrending market? Well, turns out that our robot overlords are turning out to be a little bit disappointing lately. Imagine that. The AI trade, the one that was basically free money for the last 2 years, well, that was if you bought anything that had A and I in the description or the title or the cliff notes or whatever. And you could buy any of that stuff and watch it go to the moon. And the market just had a little, what you been doing for me lately type of moment. Take Oracle, of course. They came out and said that they're spending a freak ton of money on building their AI infrastructure. A year ago, the market would have thrown a parade. This week, in fact, a quarter ago, they threw a parade. But this past week, it was a bad news. I mean, it was kind of like telling your spouse that you're about to invest in a home renovation and then them getting mad that you blew the savings account on that home renovation. And then there's Broadcom. They make chips that power this whole revolution. They had a great quarter. I mean, like a stellar quarter. But they didn't raise their forecast. Their AI revenue forecast, we raised it, but not buy enough to impress anybody. It wasn't a big enough pile of gold or cash or whatever that investors thought it was going up, so they threw a tantrum and the stock actually went down 12% on Friday. And to top it all off, OpenAI released ChatGPT 5.2 and the market just kind of shrugged. No, whatever. No new shiny object to chase. I mean, this is kind of like a classic sugar high if you listen to some of the other pundits and gurus. I don't usually call it a sugar high, but I mean, it's kind of like a sugar high. For months, any mention of AI, take off, right? Boost your stock. Now, we're kind of in the hangover period. The easy money's gone. The story changed. And that, my friends, is where we start seeing the opportunity. So where's the money going? It's a rotation, plain and simple. Think of it like this. The super exclusive Velvet Rope nightclub called Club AI, it's a little bit crowded. The drinks are way overpriced. And frankly, the music, I need some new songs. Need some new entertainment. So the smart money is quietly slipping out the back door and heading over to some other up-and-coming bars, or maybe the old great bar, dusty old bar down the street. They're going to the cozy financial pub, the reliable healthcare cafe, and even the slightly dusty utilities dive bar. It's potentially a good thing. I mean, it's a sign of a healthy, confident market. Investors are no longer betting on just one horse. And we're talking about big money people here. They're kind of spreading the love a little bit. They're looking at companies that actually make money and actually make the stuff that people buy, like I've talked about for a while. We saw Lululemon soaring on Friday because, surprise, people still want their yoga pants. Still want to look good while they're out there running errands, I guess. Restoration Hardware also taken off because it's a weird housing market out there, and the wealthy still want their fancy couches. Those aren't really AI companies. They're just good businesses that have been around for a while. So where are the investment stories for us right now? Let's look at the bars. The smart money is hitting up with their drinking dollars, if you will. We have the financials. The bankers are feeling pretty good. After years of being in the doghouse, they're talking about a comeback in 2026. Mergers, acquisitions, we might ramp that up. We're back on the menu. The plans are ramping up for 2026. The regulatory environment is getting friendlier, actually, for this kind of stuff. When the people who handle the money and banks stand to profit hugely, especially the investment advisor banks that get hired to advise on these mergers and acquisitions deals, they make big chunks of money when they help one of these deals go through. So the people who handle all that money, they're kind of feeling optimistic about their own business and what's coming down the pipe for 2026. And when they're kind of like, when other big banks are like looking at the big banks and thinking, this is a good opportunity, it's kind of time to pay attention. And next, we've got the real estate speakeasy down the street. For the last couple of years, we've all heard doom and gloom. Housing markets all kind of messed up. Prices are all over the place. But now the big players are starting to whisper that we've hit the bottom. They're seeing some green shoots. They're seeing some new investment money coming in. They're calling 2026 a pivot year for the recovery. Now, while your neighborhood is still kind of thin here, and we're seeing people still complain about mortgage rates, the big money is quietly positioning in this space. And finally, for the truly adventurous, there's the energy sector. It's a contrarian corner. This place is beaten down and everybody hates it. Oil prices are predicted to fall. I've been predicting oil prices to fall. We're looking at probably a bottom around the 50s. And this could maybe prolong into early next year before we actually flush it out. And that should make everybody's ears perk up. It's kind of a classic contrarian play, right? Everybody's predicting oil to fall. So now's the time to start thinking about where your position's going to be. Where are you buying? What are you going to have? What's the good stuff? What's the bad stuff? The Goldman report I read notes that while refining itself, oil refining, is getting hit, the big oil field services companies actually are looking ahead to a new cycle of international activity that's going to pick up probably the second half or even late 2026. Now, positioning now is a risky bet for sure, but knowing ahead of time that this is happening lets you start making a plan. Buying when there's blood in the streets is how you find some of the biggest opportunities in the market. And the story of the market right now seems like we've got this AI collapse going on, but it isn't really an AI collapse. It's kind of broadening out the base. The party isn't really over yet. We're just rotating rooms. Everybody being in a crowded trade to maybe spreading out the crowd a little bit till we find the next hot crowded room. I still think robotics is probably going to be an upper incomer next year, an outperformer maybe. The days of blindly throwing money at anything with an AI domain, yeah, it's like the .com. Maybe we're on pause for a little bit. It's a stock picker's market right now. It's time to do your homework a little bit. Look at the fundamentals. Look at the places where money's flowing, and figure out which of these places you want to have. Maybe you want to be there before the big money shows up. Keep an eye on central banks next week. Everybody's starting to kind of hold instead of keeping on cutting, and that's a liquidity hiccup, and we could cause a market pullback. So as this kind of unfolds around the world, not just the U.S. central bank, but other central banks around the world, we've had a record year of cuts this year, and we've had a record year of going higher in the market off the back of the Liberation Day pullback. So be careful. There's not as much cuts to be had in 2026 because we've already cut a lot. Things are getting a little more stable financially. So maybe that causes a hiccup. Maybe it doesn't. See, keep an eye on our liquidity indicators as we look into 2026. So without further ado, pop over here before we talk actual trades and stuff like that. Oh, that's cool. Let's switch this back. There we go. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. If you trade those things, you might lose money. If you just invest in them, you got to be smart. All right, got to have your timeline and your plan. But if you trade them, that's where the risk comes in. So be careful. If you want somebody to tell you what to do, you can hire people for that, but nobody's going to help you do better than if you just take a vested interest in your own financial well-being. Hopefully that's why you're here. Welcome to the show, everybody. Looking at the week this week, jumping to the calendar. Last full trading week, right there, as I started a minute ago. It's 5 days this week. We got 4 trading days next week, and a paltry 3 trading days the week after that. The market closed on Christmas and New Year's. We'll be open on the Friday. I'm taking Christmas and New Year's off. No show next Thursday. No show the 1st. So just throwing that out there. Welcome, everybody. All right. Let's end the poll. Looks like optimism waned a little bit. 82 voters out of 120 people. It's a fair participation. So we're looking at 59% of you thought green, 32% red, and 9% said, I don't know. Anyway, so as we look through the week, we've got a little bit of data coming out this week. On Tuesday, we've got tentatively the weekly employment change from ADP. We've got these average hourly earnings, retail sales, non-farm employment. So they're basically putting the jobs report and the retail sales report all out on Tuesday with a ADP weekly employment change tentatively set up there too, and the PMI. So we got retail sales and PMI. We got CPI. Quietly, we got CPI last week. I think it was it Friday or Thursday? It was Thursday. CPI came out somewhere in there, I'm pretty sure. But it was just like, just blurred over. And then roll down to Wednesday this week. And not a whole lot. We got a couple of Fed members speaking. And then Thursday, oh, there's the CPI. I moved it to Thursday. Thursday's where we get CPI. It was on the schedule before, I think, to come out Friday, and then they moved it or something like that. I don't remember what the headline was. There you go. Tentative Thursday release on CPI right there. See what happens. They actually pump it out. And Friday, kind of a benign day. So looks like Tuesday and Thursday are the big interesting days. And I think it's also interesting. There's usually some shenanigans going on when they release the PMI before the CPI. I don't know. And then we have the PPI somewhere down in here that maybe they're not even going to release that. They said, which is producer price index. I mean, all this stuff just messed up ever since we shut down for a month. Preliminary GDP coming out right there, Christmas week, Tuesday before Christmas. And then we started getting, the market's going to get thin right here. Wednesday, you can see a bunch of bank holidays. Thursday, pretty much everybody shut down. Like that, the market's just going to be on pause Thursday. Then Friday, we still have a bunch of holidays, but the markets will be open. So I'll be here talking about it. But just keep that in mind right there. Market will be thin. When half the world's like taking the day off, the market gets a little wonky. It's kind of the way it rolls. And then New Year's, that'll be another interesting thing, because a bunch of the world takes New Year's Eve off, and then pretty much everybody takes New Year's Day off. So it'll be another interesting thing. The market will be open New Year's Eve. It will be open on the 2nd. We'll be shut down on the 1st. So just be careful. Have your plan in place. 5 days this week, 4 days next week, 3 days, and we wrap up 2025 for trading. So there you go. There you go. All right. How do we make money today? What's going on? What's happening? What's crapping? Jumping in here. Yikes, right? So this still has potential, even though we did make a lower low there on Friday. Didn't quite get down to as far as I thought we might. Still got downside risk here. Thought we'd get there a little faster. Still got downside risk. If we get below 6,600, and there's kind of a support zone down to about 6,600. I'm looking at ES right now, which is the S&P 500 futures, because they've been trading since 6 p.m. yesterday and provide more data. We had this little bitty gap right there. If we go look at the SPX, we got a great big gap. That's a lot of missing data. We might be on the way to fill that back in. Might be. No guarantees here. But ES right now is actually sitting here on a climb schedule. So we're looking at this. I'm looking at this thinking, well, if we have, let's delete that off. if we have the high right here and we have the low right here, here's the resistance. Yeah, here's the high right there. Here's the low right here. Run your fib tool, 0.1, 0.2. This is the 2-point tool. Here's the 618 level right here. That's 68.80 on ES, which is the S&P 500 futures, which is going to be slightly different than the cash index. And if we hold under that, down is the direction here. Now, using the 3-point tool, there's 0.1, here's 0.2, oh, missed it, 0.3 at the 618. Let's pull this down to the bottom right there. We have to turn off the magnet. It annoys the crap out of me. So that's was, 3-point tool, 0.1, 0.2. Here's the 3 right there at the 618. That makes this projection right down here where we might go to. A, B, C correction. That would be what we got potentially cooking here. So do I think the downside's done? Maybe, maybe not. Does this have to happen today? No. Could we just screw around in here for the rest of the day and then drop tomorrow or Wednesday? Yeah, absolutely. So we could rally today, have turnaround Tuesday, and make a bottom and go higher again. And if things get below that 6,600 support, particularly on SPX, things get down here below 6,600, starting to look a little sketchy. So if we dive down, back down below about 6,600 again, which is right there, get below that, the opportunity to go further down faster is elevated. This thing's starting to not look like a Head and Shoulders at all, but something to keep aware of. Yeah, it's looking more like shoulder head. A friend of mine calls it the librarian pattern, the shh. We've got two big bumps the same size. Can result in a reversal. Be careful. In Q, this is where and why I think that we might get another pullback is because this is not up here. The S&P was up high, right? We were up near the all-time highs. We're up here. Just so you can see it. See, we were up here near the all-time high. Now, SPY, you heard all the headlines. SPY closed at the highest high ever, right over here. But the futures and the cash index didn't really make a higher high. This makes it kind of corrective. And NQ, which is NASDAQ, has a much lower high and a potential to go lower. And if things get a little spicy here to the downside, see here we had the low here, we got the high here. We're working on this retraced right here. That could pull us down to the 618 right here. If we don't hold that, opens the door for lower low than what we did back here in November. So we need to hold right here as we pull down and bounce to get that upper target. All right. Right now, NASDAQ is providing better clarity on this pattern than what we see on ES. Yeah, ES is kind of muddy, very overlapping. NQ is very clear. Now, if we can hold, it could hold. You're going to hold right here where we already held. It may push down just a little bit lower, or all the way into the 618. And we can hold any of these points. So there's our downside supports right in here. As long as we hold one of those and turn and break back out above this, probably going on new all-time highs. Probably last into the new year at this point, since we only have like 13 days left, 12 days left. I guess 12 days left this year. That's probably what we're looking at. So as long as we can hold one of these supports, you're looking at that into the new year. Now, what happens after we get up here? Not sure yet. Depends on the price structure. So be careful. This can get some continuation lower. We could grind around in here. We could actually come a little higher today. Bounce off a 618. And grab your 2-point tool. Go off of this high. Go off of this low. We could come on back up here today. Just kind of grind around like this. And then turn down. And that could be what we do the rest of the year. Right there, pretty easily. Don't have to make big moves. So we may see some flush out. I don't know. If Santa Rally may not come to the market. I don't know. This actually tagged 2600. Right there is a little candle in there that actually tagged 2600. Or yeah, actually tagged 2600, and that was, I mentioned quite a bit that may be tagging 2600. Maybe that's the high on Russell. This is your small caps. Now that doesn't mean it has to be. We can go on up, fully touch it, could come back down, retest the breakout one more time, and then come on up 2700, 2750. But you know, this would be very classic to retest the breakouts. That would kind of fit with NASDAQ pulling back and then rally on up to 2750 area right up here. So that's what I'm looking at right there. Oil getting close. If we can break down below this 55 area, should flush it on down to 50 pretty quick. And that may take into the new year, like I was talking about. So once we make this bottom, we'll probably do something, and that could be a long-term bottom. We could start a rally for quite a while, take us all the way back up, retest this $100 price on oil. So if we touch that 50 area, we could rally back to 100. That's a double. That's a 100% increase right there. And USO would be the kind of one of the easier ways to gain exposure to this without leverage. GC. Looks like we're tagging that fib line. Be careful right here. It could break on up higher, make a new higher high. We're in the vicinity where it could just poke a little higher. But we're touching that point where A equals C. A equals C. A lot of times, though, we'll see C equals 1.272 times A. So this could actually make a higher high here before it rolls again. Just be careful. We're catching squiggles here. If you've liquidated and you're getting some FOMO, that's a good sign that maybe you should sit on your hands a little bit. If this spooked you out at all, and you're sitting here going, dang, man, I'm missing it. Just be easy, all right? We're due for a bigger correction, due for a bigger pullback. The BIS over the weekend issued a report that gold and equities, particularly the S&P 500, were bubbly in 2025. And that they're likely, we've not seen this, where gold and S&P went higher in kind of a giant fashion together. We've not seen that in almost 100 years. And at which point that we might see it both take a big spill at the same time, and gold will not act as a hedge to the S&P during that time frame. It negates the advantage of holding both to kind of stabilize your income if both are going to potentially pull back. So be careful. That was the BIS. That's Bureau or whatever of International Settlements. So it's not just like a U.S. thing. That was like an international thing, putting out a quarterly report. Bitcoin pulling back to the 618 again. We can hold on to this. Still have potential to go higher. This looks like a big sideways correct. One big correction now with the failed breakout. Just kind of like the top of the potential B wave. This looks like the A, the B, the C, but this is a warning. If we get below this low or this low, that's the confirmation that this might be playing out. So definitely keep an eye on what happens here in the next day or two. If we get the bounce and the break higher than these highs right here, probably coming on up here, 106, 107. That's the next price up here to watch, the next resistance on the upside. If we get above that, probably going to all-time highs. If we bounce off of that, come breaking back below all this stuff, back to this guy. There's more risks for crypto winter, which is a 10-month period. At this point, roughly 10 months of downward price pressure on Bitcoin that can take it down to the 30 to 40K area for potential bottom. So the risks of crypto winter are elevated. 30 to 40K is the target. 10 months would be the time frame. If we can do some bullish stuff, break back above this upside resistance here, we can negate this for now. Ethereum, glanced off the zone, the roadmap line zone, came back down. We're hunting for support. If we can turn back and break back above, that's an indication that we have a setup to go back to all-time high. If we break down below these lows, very similar to Bitcoin, indication we've got crypto winter taking hold. NKD, indication of global liquidity. And like I mentioned on Friday, that looks like we may have an A in place. A B, absolutely beautiful correction setup right there. That retraced and held the 618 zone. As long as we keep that intact, downward pressure, looking for the roadmap line hit. Absolutely beautiful correction. ABC. This pushed below 98.5. The target is now back to the low. We could save it right here. There could be some sort of save, but right now, downward pressure. We'll probably get a bounce. Like, it probably won't just flush. It's unlikely in the dollar. I mean, sometimes we do, but it's unlikely in the dollar. We are coming up on this 618 area, which is right here. Right around 97.8 looks like. 97.8. So we may see a little support right there, a little bounce before we flush it on down. I would expect it to make a lower low than what we made back here in September. Apple continuing the pullback here. If we can maintain the uptrend of lows, we still have the uptrend going, but if we break down below it, we may take a quick trip either back to the breakout at 260 or back to the roadmap line down here, a little further down around 245, 250 area. And depending on how fast this happens, that's the breakout from the high back here at the beginning of the year. And this could just all come together out here. We could just be lackluster on Apple for 3 or 4 months. Amazon, continuing to fill out this head and shoulders kind of thing. Be careful if we break down below the neck. It's very quickly can develop into further downside and might even go lower low than what we had back here at Liberation Day. Google still consolidating in here. I want to see it hold this 304, 305 area and bounce on up to 337. Still has that intact. If we start below that, next support down and the roadmap line all coming up into this area right around 250 to 260. Meta, looking for this to finish up this retrace. That was a crazy like spike on Friday. I think it was Friday. Crazy spike up and reverse. I want to see this come on down to the 618 zone. In fact, we're getting a little closer here. Right around 630. If we can actually tag that right there, that would be really nice for going higher. And I'm sorry if you can hear that. Sounds like they're using a vibratory hole saw to cut some light fixtures that right underneath me. Awesome. Still rebuilding the office underneath me. And hopefully that gets wrapped up in a week or so. I think they're trying to have a January 1st or January 2nd opening day for the new office downstairs. So, but they got to paint and carpet and all the other, hang ceiling tiles and lights and all that stuff too. So they got to get this drywall crapped on. In Microsoft, if we hold on to this zone here, we're still testing this 618 right around that 475 area. If we hold on to it, higher. But if we start breaking below it, move the fibs. Awesome. Probably gonna start putting downward pressure down to around 415 to 420. And yeah, I can see the mic is picking up that sound, so I apologize. Can't do anything about it at the moment. And NVIDIA did tag the 1618s. We did touch the roadmap line. We have the breakout. I keep talking about the same thing because nothing's really changed here. This is probably coming back down to retest this breakout. Downward pressure remains until we get down there and test it. If we can hold it, we can go higher. If we don't hold it, probably going to push lower again. It's kind of the long and short of NVIDIA at this moment. Tesla. Go, baby. Been talking about this for a while. Near term, basically 490, 500. Bigger picture, 550. That's kind of the targets we got cooking here. Go, baby, go. TSLL, the leverage Tesla, 25 is kind of the target right in the moment. And we may get a little spicier on the upside, 26, 30, 37. It says 2x leverage on Tesla, so we can get her going. Now, you look at the bigger pullback here, I don't think we're going to be able to make it to 53, but it's possible. If the underlying just gets absolute nuts, we could see this, but right now, my targets are right in here. Netflix, still trying to confirm the bottom here. I said that the split would be negative, and that's pretty much what we got. Let's go from the split day down to the bottom. There's a 16% pullback. Is that good enough? I don't know. We'll see. We'll see. One thing I thought was funny, their bid for Warner Brothers Discovery. This thing's sitting at 30 and keeps poking above 30. Paramount has a $30 bid for the entire company. $30 bid. If this thing pushes above 30, who's going to take 30 a share for a buyout? And Netflix bid $27 a share just to take the Warner Brothers part and leave Discovery and HGTV and all that stuff. So Paramount valuing this part at $3 and this part at $27, just like Netflix had a $27 bid on the Warner Brothers part. So that puts the value of Discovery at $3, which I don't know. Is that really the value? Now, when you zoom out and look at this chart, the crazy thing, I'd drawn this pattern. This thing has a setup to pop up here in the 200s. So the buyout deal may not happen. This may actually shoot up in here. It's already on the chart. I've had it on there for a while. Craziness. Light continues to be absolute monster. Getting a little bit of pullback on Friday. Be careful. That's really frothy. GE Veranova went from the roadmap line up to the target. Watch out for another retrace there. App Lovin still got upside target. 788. AGQ. The next target up. Be right up there around 172. If you're still riding this, be careful. Know where you're getting off the train. Toyota Motors. And finally getting some upside here. 225. 242, 244 area if we're going to turn this into something more bullish. I want to see this get up here, do a little pullback, hold in here, and then go higher. SanDisk probably coming back to the roadmap line over time here. It's the same on MU. We're kind of topping out. We're at a point where it's hard to go much higher without a retrace. Kind of need to come back and retest this breakout. Or at least take a breather, at least take a rest. Fast retrace sets us up to go high. Slow retrace sets us up to go higher. Either way. Either way. STX also needs a pullback. TER also could use a pullback, although 218 could be the next upside here. But that's been one big straight move up with just that little bitty flashback on the breakout. So 218, and then we could rest for a little bit before we pop on up to like 302. Caterpillar is not a stock known for just ripping, so this gives me a little bit of caution here that this is getting a little nutso. 657 here, and we may need to see this pull back. It's not like they have AI data centers, but I guess they're all their construction equipment to build those AI data centers. But yeah, be careful. SCCO, finding some resistance. You know, we're not seeing that explosive growth higher here on Deere, which also makes a bunch of construction equipment. So this one could catch up, but not so sure here. 550 would be the upside on Deere. CLS, let's see, Southern Copper, SCCO, hit targets. FCX has the potential to break on up here. Breakout, we could see a big upside, probably in the 70s, maybe 70 to 80s as the targets. CLS, watch out for that to retrace as we see rotation. COHR, watch out for that to pull back as we see some rotation. AMAT, Applied Materials still has a 285 target. Carvana, get listed in the S&P, can get some juice on it. And it retraced and going higher. It has 518, but it's going to be tough to go super high without another retrace in there. KORU, which is 3x bulls on Korea. Consolidating a little bit. May need to retest this zone that we broke out from. So we may see a little bit of softness here before we bounce and go higher. INM, it's a biotech, I'm sure. Biotech pharma. And it's a lot of choppy sideways. Palladium. Very similar to platinum. Got like a 165, 170 target up here. Pushing on up, you know, we got 150, 170, somewhere in that zone, and maybe up to 175. And then we may take a little rest and then go even higher from there. PPLT is the platinum. And yeah, see, it's already hitting that first target. The next target on platinum is up around 205, 206. And then we'll have the 270 above that. Hershey's. Still working on confirming the bottom here. We're going to have to get above 213 to really confirm that we have upside potential on Hershey's. And that one's trying to set up a reversal here. If we can get on up to 87, that would be good for indicating we're going to go higher. So first move, second move. If we just turn down at 50, though, watch out for a lower low on CMBS. There's a cannabis ETF there. AU. Watch out for this to reverse. That's going to be Ashanti Gold. TSEM. These are getting frothy. These ones that have outperformed this year, probably not going to keep doing that next year. They just can't maintain this extreme uptrend. It's just not a thing that's going to happen. You see what happens here. Extreme uptrend, little pullback, little consolidation, and then we break down and come back to reality. It's just this is a pattern that happens over and over and over in the market. So all these things that are kind of euphoric and ridiculous, probably going to meet their end at some point. Just be careful. If you got lots of profit, I mean, high prices tend to attract more money, but at some point, greater fool theory and the last fool buys, and then it's all downhill from there. Just be careful. VRT coming back down, the roadmap line would be a great place to find some supports. Lower low than that low right there. Retest the breakouts, all those things, and then we can go higher again. FAS, 3x leverage on financials. This one may outperform. I have a bigger target here, and then I've got a really big target up here. So we may see financials outperform. Western Digital coming up on this level. Kind of predict, this big consolidation here, and we broke higher. We may run this course up here around 225, 230. CIEN. Also frothy. Dollar General. About to break out and go higher. We got this little bit of resistance here, and if we could do that, we could very quickly see some upside action here. Very quickly. So we didn't quite get as deep as I thought we would, but coming up into that 618 zone right there, 155. So I want to see this boost on through, and then we can get some higher targets going right there. I am in DLTR. I have a $25 or $125 call sold against my shares for this Friday, December 19th. And if I get called out, that's about a $6,000 trade I made right there in my 50K challenge account. Right here. And year to date. Actually, there we go. Year to date, roughly $41,000. The month, sitting right around 7. That's not 50K. This is my 50K challenge to build this number into a 1 month profit, 50K a month. And keep doing that for 6 months at least. 7 is less than 50. So still got work to do. This will probably be a challenge that go ongoing for a few years. Gonna build that up. And I got all the trades right here. Like, you wonder what I've been trading? Yeah, there's Chipotle calls. There's IBIT calls. There's NASDAQ. So what I've been trading, it's all in here. All in the hips. You can find that at KInfo. So I've got Dollar Tree in that account. Look for that to close out this week. GLSI. That's a downtrend. I probably wouldn't touch it. WPM. It's already to the targets. Too late to the party. And it's target. Be careful. Watch out for a retrace. A-Lab. Look for that to turn. Right back above 201. Get some 287 upside. Bloom Energy. Probably coming back to the roadmap line. GILD. Probably coming back to the roadmap line. DOCS. Hunting for the bottom here. First move, second move, third move. Let's see. Here's the high. Here's the low. Here's the... Yeah. Looking for this to hold right in the zone around 40 to 45 where we are. If we can hold that and break higher. Upside resistance back at 66. If we get above that, upside. This is the kind of stuff I'm looking for in the list. Not stuff just sitting at all-time highs. NEM was probably my biggest trade this year. Bought in back late last year on some 60 strike calls that were for $1. Those things went up to like $20. Sold them out. Made like $30,000 or $40,000 on that. And I'm off of it. Looking for a pullback. CRDO. That was mostly my mom's account. So one of my accounts, I was heavy and then I lightened up and then rode just a couple calls and made a couple grand. GAAS, probably a little frothy. Oklo, sitting on support here. Want to see this turn and break higher. But this is back to, if you're not making money in the AI trade, even though this is AI energy trade, they're not making money. They have no revenue. There's no income. They're like, oh, they got government contracts. They got this. They got that. They're not bringing in any money. They're just burning money. That's a dangerous situation. Could result in a big retrace. Another one going absolute exponential. That's Arden's physical silver. Sprott's physical silver. Now, if you want to be in, gold or silver, I highly recommend you go after the Sprott funds, not the GLD and SLV are the popular ones, but those are paper. They don't have the reserves. The reserves are not there. Sprott has proven reserves. If worst comes to worst, Sprott has the physical silver to back up their ETF. SLV does not. GLD does not. They have not passed an audit in years. Sprott regularly passes their audit. Better place to play if you want exposure to physical silver and gold, and you don't want to actually go to the coin shop and buy it. Sats 110. That can be a high. Careful. We could break on out, go to 230, but probably not without a little rest. You can see we kind of ping-ponged up here. Hit that one. Retrace back down. Shot up to this one. Retrace back down would be expected before we shoot on up higher. Or come back to the roadmap line here. It's the kind of price action I would expect. I don't usually trade any of that because the high probability pattern is I bounce off the roadmap line like this and hitting the target. That's 75% likely to occur. That's kind of where my trade lives, right there. People are like, oh, well, you missed out on all this. I don't care. ALB. Now, LVS, bigger picture. This can go higher, but it does need a retrace before we do that. ALB coming on up. Resistance sitting up here at top of the box. Right there around 150 where we topped out on the way down. So watch out for that. Coming up pretty viciously here. It's grinding. We may get a negative reaction off of that before we can push through. It may just, it's possible it just gaps up through that. We see that often enough, but a negative reaction is higher likelihood than just gapping on through. You see we gap through this high. So we could possibly gap through those prior highs right up there. We'll see what happens. I'm not touching this one though until we establish the bottom is in place with a retrace. We haven't really had any big retrace. It's just grinding higher off that low. Just doesn't give me the warm fuzzy feeling. SLV hitting the targets. 70 is the next upside here. We're at this 60 area and we're just kind of parked for a couple days. 70 is the next upside, but very classically, we would see a retrace. This is the more likely path than this just ripping right here. IPR. I'm not sure that that's the bottom yet. Decliners, ARGX, probably going on down now. There was some news on that. Downgraded. Probably got to come back and retest these lows. ONC, back to the roadmap line. Looking for the bounce here. Here's the high, here's the low. Looking for that bounce back up through 350 to get 396 upside. SMX, I wouldn't touch it. Dumpster fire. Reverse splits galore. Texas Instruments, finding resistance at the roadmap line. Got to get through that. Come on up here, get through this resistance. In fact, that resistance is not in the right place. There it is. Got to get through that 192 to indicate we're going to go higher. If we bounce down, we can go lower again. 144 on the downside. ARM. Yeah, this little baby may have been the shoulder here. Be careful. Like this breaks down, we could see this flush back down to the lows. Adobe, probably not down on the downside. Finding resistance at the roadmap line. People are talking about how it's gonna to beat down, gonna reverse, but I think it still has some downside to go before we're done. Zillow, still working on a retrace here, and hadn't been able to break higher yet. So be careful. Housing market still stumbling its way through. Zillow Group, another ticker for the same thing. This might be set up for a lower low here. ABC style. ABC would be a lower low right down in the low 50s. That's what that looks like at the moment. Move down in here. Do that. Could be an opportunity to buy again. Cannot keep my finger. Tune a T. There we go. Question mark. I'll have to see how that actually bottoms. iRobot filing for bankruptcy. Maybe in receivership. All their assets may go to their biggest supplier. Maybe acquired by Shenzhen, whatever, Shenzhen Pika. Guess we'll see what happens on Roomba. Baidu. Looks like we're coming back down for a roadmap test. ENTG. Sideways. Baba. Coming on down for the roadmap test. Stuff set up for potential bounce today. Entry today. Here's the high. Here's the low. Turn on the statistics. Yeah, I didn't like that one, but 25 target. DS. And that one also picked up this small bounce here. 32. Oh, I can feel that vibrate in my desk, whatever they're cutting on. EXP. These are all downtrends. Nasty. 251 potential. MWA. That's in it from back here already. That's just higher lows, lower highs. Watermelon's easy squeeze. 2960 target. PepsiCo. In it from back here. They grab the smaller bounce right there with the close. So 157 and 161 targets. And Roku. The first clean one. Here's the high. Here's the low. Entry right there. 120 target right there. Right like that. And WTW. Yeah, sloppy. I would say this didn't kick off the bigger pattern, which would be that high and this low. Yeah. You're going to move up through there at 359. So that's the list for today. Not a lot of awesome stuff there. And still got this potential for a pullback today. So turning red. So those of you that predicted red at the head, there you go. So I'll be on Market Masters at 11:30. I'll be back tomorrow, same bat time, same bat channel, 9:15. Hunting for opportunity again. Give you another market update. What's happening, what's crapping. And remember, nobody's watching your money more than you are, so take a vested interest in your financial well-being. Come hang out on Market Masters 11:30. Jack and I teach you how to income trade. I go through the trades I'm taking in this account right here on my mission to 50K challenge. And we'll see you later.